Well, good morning, everyone. Welcome to our Wednesday morning open house trading room. My name is Eric Senft. I'm going to be your host here for the next hour and a half or so. Bear with me a moment as I get you my monitor. For those of you who are new to the room, welcome. What you're looking at here is the DTS trading system. That's the diversified trading system, and it's diversified because we're looking at the market from 3 different points of view. Here in the top left, this tool here is the Hawk Micro Scalper, which of course will pick up scalp signals. Top right, Falcon Swing Trader. Bottom left, Eagle Trend Trader. Bottom right is the Raptor. The Raptor is the latest addition to the DTS family. It is sort of a blend of the other 3 tools. It's going to incorporate elements of the Hawk Scalper, Falcon Swing Trader, and Eagle Trend Trader. The charts we're looking at on this monitor are the NASDAQ, that's the NQ. I'm also watching soybeans and crude oil this morning, but I would be happy to take a look at any market which is of interest to you. I'm sure there's a few E-mini traders in the fold here today. I can certainly pull up an E-mini chart if you like. All right, so the market just had the opening bell, and let's take a look at what the overnight has been doing, where we're heading. This is our Falcon Swing Trader, and there was a little bit of pre-market activity going on here about an hour before the market opened. You can see we had some couple considerable swings. Unfortunately for us, the market seems very range bound, at least at the moment. Here was the London Open, a little bit of a run up. Hit our primary resistance line. Oh, by the way, let me give you some of this information, some of the tools and indicators and so on that you're going to be seeing here today. You can find out more information about them at that link that I just posted to you. This particular tool that you see on here, this is the Ultimate Support and Resistance Suite. This is an add-on tool. It will work on any chart, not just a DTS chart. These are not pivot points. These are not Fibonacci levels. These are our own unique support and resistance lines. I'm quite proud of these. These took a long time to develop. But like I say, it is an add-on. I happen to have it on my Falcon Swing Trader, and you can see that we ran up here to the primary resistance, bounced down, hit the median line, and now it's trying to get down to the primary support. Oh, look at that. We just took a break through primary resistance. This could be a fairly bullish sign. A lot of times when the market breaks the primary resistance or the primary support, we can actually anticipate a 2-zone move. So we'll see whether or not the NQ is actually going to stay in rally mode this morning. We are generating a trend change signal. Oh, here we go. Oh, there. All right. You guys are going to be like that, are you? Normally, I try not to take a trade this early. We're only been trading for a couple of minutes. All right, there's our signal generation. I'd like to cover it down here. Okay, I can. So the signals generate the same way, regardless of the tool. We're going to get a warning dot, and then when the signal is complete, we're going to get a triangle and a hash mark. That tells us that all the trade parameters have been met, and now it's time for us to make a decision. Okay, we're seeing a little bit of a reaction there. We took a little bit of slippage on the fill. There we go. Get up there. Okay, I'm going to manually roll my stop, and now I'm going to engage my stop strategy. Get up there. Come on. Maybe I'm going to hold my stop just a little bit longer. I'm going to hold my stop just below that swing. See if we can't get the buyers to step up one more time. And then I'll get more aggressive rolling my stop up. So this tool that you're seeing me use here on the right hand side, this is the Trade Manager. This is a very powerful tool. The Trade Manager does several things for you. First, and maybe most important, is it controls your risk exposure. So regardless of where you place your stop, you are never risking more than your preset amount. I currently have it set at only 1% of my account. So Trade Manager is always going to limit my risk. And then we have this trade management feature here where we have 16 different stop strategies to choose from. And so you can set your stop strategies and the Trade Manager will automatically manage your trade for you. All right, it looks like the buyers are going to be stepping up here in a moment. I'm going to switch to a more aggressive stop strategy, maybe like the bar high low. All right, there we go. That's their last chance. Let's get that stop up there. Okay, so now it's going to roll my stop bar for bar. I've determined that this is the last chance for the buyers to turn this market around. If they fail here, well then I'm going to pull out. Take my lumps early. The chart style that you see here, these are the mean Renko bars. You can also purchase these separately if you like. The mean Renko bars, very powerful chart style. I like them because they clearly shows you where the buying and the selling is going on. Almost to break even. Come on, get up there. There we go. We're just about to hit our break even stop. I could force this trade to break even also via our break even button. There we go. Come on. There we go. All right. And we hit our profit objective also. So hooray, one for the good guys. You're going to see here that we would have generated complementary signals also on our hawk right here out of the open. We have what we refer to as our first micro-macro crossover signal. Pretty easy to identify. We have the micro line crossing over the macro line. Everything is in sync, which means we have green bars, green trend lines, green filter, and a green signal printing. Very, very high probability trade. So the market rallied from there a little bit, came back with a macro pullback signal, another very high probability trade. Yeah, like Joe says, the bars are nice, they're not mean. We need to rename them median Renko bars. Yes, I know, it's a terrible name. It sounds like they're angry. Yeah, the mean Renko bars, they incorporate the best elements of a range bar and a candlestick. So very, very good chart style. Okay, if I shoot a trend line across the tops here, it looks as though the market is starting to come up a little bit short. That could be an indication that we're going to see a change in trend here in a moment. We're generating a red bar buy. This is actually our counter trend signal in the hawk, or a possible counter trend signal. It's still early. I'm going to dial down the risk a little bit. We're quickly coming up on my least favorite time of the day to trade, a quarter to the hour mark. All right, so we've printed a red bar buy signal. You can use this signal a couple of ways. You can use it first as an early warning that perhaps the market is going to reverse and print a sell signal. You can buy the signal, which would look like that, or you can also set up to sell the failure of the signal. And I'm going to risk it right up there. I'm going to disable my stop just for the moment, because this is still fairly early, right? If this market is truly reversing, I need to see a test of the extreme first before we get the failure. So I need to see, or it's likely I'll see a retest of the high. So I'm trying to give this trade a little bit of room. And again, I'm a little bit early on this signal. You can see now our micro line and macro lines have crossed. Everything is in sync now. I'm getting the warning dots. So this is actually could develop into a first micro macro cross signal, a sell signal. That would be desirable because that again is a higher probability signal than the red bar buy, which I've tried to sell. Okay, here's our first micro macro cross. Come on, get down there. Get going. Come on. Joe is asking, why is that? I'm sorry, Joe, you're going to have to clarify a little bit. Come on down. All right, so it looks like they might try to give us that test of the extreme yet before they actually fail and head lower. So this is what I'm looking for now. I'm looking for this portion of the trade here, a possible failure, and then that should send the market lower. A lot of times we try to hold out for the higher probability signals, but we're in demo mode today. So once again, I'm only risking 1% of my trading capital here. This enables me to place a reasonable stop, right? I don't have to place my stop ultra tight to try to keep my risk under control. I control my risk by only allowing a certain portion of my account to be at risk. Of course, we've seen a little bit of a run up here. Yeah, here they go. So we're still holding on this primary resistance line. Our trend line here is all out of sync, so no real tradable signal here, not yet. I'd love to see this turn and give us a sell signal. That would give us a trend change signal, which is also a higher probability signal. All right, sellers, where did you go? Oh, I see. Joe's asking, why is 9:45 such a terrible time to trade? The first 15 minutes, around the first 15-minute mark, a lot of times I will get a false signal. And Joe's asking, why is that? I don't know. Sometimes the signal will work out, but what I discovered from journaling my trades, and here's a little heads up for you guys, journaling your trades is very important because that's how you discover things like this. I discovered that when I took that trade at 6:45, a lot of times it would not work out. I think it has to do with the opening range that the market is waffling a little bit. They haven't really settled on what's going on. We're at a quarter to the hour right now, so 9:45 in the east, 6:45 here on the west coast. And like I say, it's not always the case, but from journaling my trades, I did find out that there was that rather annoying anomaly. So here we actually generated a buy signal on the eagle just going into that quarter to the hour mark. We do have a chance to take this signal on what we call a second push entry. In other words, we let the signal trip. So we see the limit of the market at the moment. I could probably risk it to the hard edge. Yeah. So we know the current limitations of the market are right here. So now we can set up to buy above this bar. So if the market reverses and now heads higher, we'll loosen up that stop a little bit. Then I'll buy. Okay, we'll just park that at the moment. Let's get back to the action here. You see the hawk is starting to print some yellow bars. That tells me that there's a very neutral market. Notice now how we had our test of the extreme. The market is heading lower. I'm going to switch to a more aggressive stop strategy now and let the trade manager start to manage my position. Because I've seen the sellers try to sell right here, right? The buyers are going to try to buy right here. So I'm giving it a little bit of room, but not too much. The sellers need to take the market at this point, or the buyers are going to run them over. And it will probably be time to leave. So I'm looking for one more bearish bar, and then maybe I'll get more aggressive still. The bar high-low is one of our most aggressive stop strategies. Come on down. Come on. There we go. One more. There we go. You can do it. Get down there. Yeah, like Joe says, the price is right. Come on down. You can be the next contestant on The Price is Right. All right, I'm going to roll my stop. This might prove to be a little bit too aggressive. The best stop placement is above this swing high. Alternatively, you could hold above here, above 44.56. All right, so I allowed them to take me out. Now I'm going to make a note in my journal whether or not that was too aggressive. So I'm going to monitor this trade for a little bit. My alternate would have been up here. And now we'll see in a few moments whether that was a good call or not. And I'm also testing where the ATR stop strategy would have kept me. It's always a little bit of a balancing act, isn't it? Trying to determine how loose to keep your stop in order to allow the trade a chance to find its profit objective. All right, our eagle signal has since flipped over. We've actually generated a sell dot. Not that we're going to sell it. Not yet, but if it comes back, you see it's going to come back with a with trend signal now. So the signal I just deleted, I can put back in. And I think I'm only going to risk 1% on this one also. All right, so the NQ a little bit on the choppy side right now. And you can tell the chop too here on your hawk. See all these yellow bars that are beginning to print? Okay, so the ATR strategy would not have kept me in any longer. So now we'll see whether staying above that most recent swing high would have been the better course of action. If this market is turning over, the hawk will generate another signal. But when you start to print all these clusters of yellow bars, really it's a sideways range. And you're probably best off not touching it until we get outside that range. So what we would be looking for is we would be looking for a breakout and a retest, and then a chance to buy. Signal would probably print somewhere around there. Same thing here, a breakout, a retest, and a chance to sell. So these kinds of things, the market does time and again. And the Raptor also going to produce a lot of yellow bar clusters. Part of their Raptor programming, it borrows from the hawk as far as a signal or painting the bars goes. We are getting a double pullback signal here in the Raptor. So the signal is actually going to print right here. I'm going to change the ATR a bit. All right. Now the Raptor, the system I'm using on the Raptor is slightly different. This is what we call the Trailblazer. And the Trailblazer is more of a one-click system. So you see I've placed my entry order, and that order is live the moment you put it on the chart. If this order is engaged, you're going to see the Trailblazer automatically throw in a stop loss at my stop strategy and put in my profit targets as per how I've outlined my trade parameters. Currently, I'm only going to risk taking one contract and with a target of 20 ticks. This little tool that you see here, this is the Geiger counter. The Geiger counter gives you a visual representation of the time and sales. The histogram here gives you a history, so you can see whether the market is leaning to be more bullish or bearish. This is very useful when you're contemplating a signal. Also, when the market is approaching important support or resistance areas, as it is right now, as we get back into the hard edge here on the Raptor, whether the market's going to have a bias one way or the other. If we're going to see the needle dip here and become a little bit more bearish. This is also an add-on. You can put that on any chart, not just DTS system. Our alternate settings for the DTS tools, okay, I can cancel that order. That double pullback isn't going to work out. Is 446, and I tell people the way you can remember that is the telephone prefix for Moose Jaw, Saskatchewan. And Joe is asking, what was the name of that town again that you use for the alternate settings? Yes, Moose Jaw, Saskatchewan. All right, so our Eagle signal not following through, we can cancel that. And so far, I would have been better off holding my stop up here. Okay, we are getting another first micro macro cross signal, so I'll have another chance at it. I could even just throw a runner on this one. Maybe what I'll do, if we engage the order, I'll stretch the profit target a bit. Oops, our signal faded. Hold on. Oh, there it is. See, I'm waiting. This macro line is not in sync, so technically this is not a signal yet. Let's cancel that. And why don't I turn this on for a runner today? There we go. Now we have our complete signal. So there's the warning dot. I can anticipate that the hash mark is going to print right here. Because of my handy dandy logic counter, I know where the bar will finish. Now, for the sake of a couple of ticks, I could risk it below the low, this swing low. Chances are pretty good if they fill me here, they're going to fill me at the swing low also. All right, so let's see if they poke through. Yeah, they would have filled me at the swing low also. So I've got my break-even trigger working. I'm thinking if we see 44.40, I'll just pop out with profit. Just manually close out the trade. Although I can always add a buy order. Ooh, lots of thinking going on. Now I think what I'll do is I'm going to hold my stop just for the moment where it was up here. There we go. About to hit our break-even trigger. Get down there. There we go. Trades at break-even. And now I can look at perhaps doing something like a parabolic or a bar high-low. I got to stay below here though. Come on, don't tag me yet. Get down there. Get down there. You know you want to. Joe, get in there with your 10,000 orders and send that market lower. There we go. Thanks, Joe. We need somebody to take 44.45. See, we keep tipping 44 and a quarter. Come on, somebody take 45. There's 44 3/4. Oh, 46. Going the wrong way, guys. No, 46 half, 46 3/4, 47. Oh, they're going to tag me here in a second. Trade's at break even, so it's not a real big deal. Yeah, this whole 44-45 area seems to be a stumbling block at the moment. If they fold at 45, we should be home free. And I admit I'm a little bit aggressive with my break-even stop on my scalper. Oh, there's 45 half. There we go. There's 45. Ooh. Somebody touched it. They did not like that. somebody hit 45 and the market made a rather violent move higher. So a lot of buy orders were down there. It might not be enough to support the market. There's 45 again. 45, come on. 44 3/4, come on, you guys. I thought for sure once it hit 45 it would just fold like a house of cards. Get down there. There's 4, there we go. All right, so now I'm going to move to a parabolic stop, and Trade Manager will just automatically adjust my trades as per the parabolics. Again, I could go with something even more aggressive like the bar high low. There's a lot of different moving average stop strategies. Some of these are ultra aggressive. A little bit of hesitation going on. They don't realize they want to head lower. Get down there. Oh, don't you dare leave me hang at 44 3/4. Get down there. Scott, nice to see you in the room, Scott. Scott's asking, when is the next profit run? We actually haven't scheduled one. We're doing the daily trading room, of course, for the DTS owners. All right, well, there was a little bit of a not really hit and run style trade. We tried to capitalize on a larger move there. Still not a bad trade. The profit run, for those of you who are unfamiliar with the term, is when I try to, over the course of about 60 days, I think we normally do it for, I try to trade an account up as high as I can. So it's partly a little bit of showing off. And fortunately, the past profit runs that we've done have all been profitable. It scares me to death because we do it live. So there is always the chance that, well, there are days that are losing days, no question. But overall, we've always managed to print a very respectable number at the end of the profit run. Okay, now we're into the hard edge here on the Eagle. This hard edge is significant. We normally see some sort of reaction here, and it looks like this time is not going to be different. Yeah, I'm getting a bunch of people asking now, when's the next one scheduled? We don't have a profit run scheduled. They are all recorded. They are all at the website if you would like to watch a past one. They're all about 2 hours long and you got 2 months worth, so there's a lot for you to watch if you want to go that route. We're getting a red bar buy signal. Now the red bar buy off of the hard edge bounce is a very reliable signal with the Eagle. You're going to see one right here, same sort of idea. We're getting red bars, but we're getting a buy signal. Normally that has pretty good follow through. Currently we are against our ATR, which we're using as a filter. That's a squiggly red and blue line that you see here. Signal hasn't printed just yet. We just have the warning dot. You saw the triangle flashing there for a moment. Almost had all the trade parameters in place. If you wanted to be more aggressive, you could enter just the other side of that ATR, cover down here. I'm going to adopt Mike Filiguera's position, and what Mike does is he actually lets the ATR turn over, and then he'll take the entry above that bar that flips the ATR over. You can see here, you would have delayed your entry, this particular signal, well, depending on where you had your stop, may or may not have worked out. So the signals are good, but unfortunately they are not 100%. We're still working on that 100% signal. Oh, Michelle says that we had that retest signal that I was talking about here on the Falcon. Oh yeah, so we are. So here was that range that we were looking at. And remember, I was talking about the market breaking out, retesting, and coming back with a signal. So currently we're in this mode here, the retest mode. And we are also working on a Falcon trend change signal. Remember, the Falcon trend change signal occurs when the trend line changes color, and you get this move that changes the trend line color, then you get the market going against it, and then hopefully it'll come back with trend now. And this might even be developing into a late filter entry signal. Notice our filter is currently out of sync. The important part to this signal is that the trend line not change color. That could be a pretty reliable sell signal. If the trend line changes color, however, all bets are off. Oh, still fighting that red bar buy here on the Eagle. More yellow bars on the Hawk, so that's not encouraging. We'll see if that turns into a 4-arrow consolidation. That might be saleable. So there's 3. So we have 1, 2, 3 signals. The 4th signal, I might attempt to sell it. Falcon getting a little bit stronger. Come on, we need it to come back down here. We need this bar to turn red and for a sell signal to print, and then we can be all over shorting that. Nope, not going to happen. So our trend line now out of sync. Technically, we've avoided a late filter entry signal. Well, the Raptor trying to recover. Oh, way to go, Joe. Joe's nursing a Euro trade. He said it's got to go one more tick. Okay, everybody at the same time, let's root for Joe. Come on. Now, I almost thought we were going to have a reversal signal here on the Raptor, but it's not following through at the moment. We'll come back to that. All right, here is a 4-arrow consolidation pattern. So we have 1, 2, 3. We're working on signal number 4. This does tend to be a pretty reliable signal, but we're also looking at a pretty wonky market right now. And maybe what I'll do is we'll just throw a runner on this one again. We'll enter down there, cover, oops, can't do that. See, Trade Manager also prevents you from risking more than you can afford. Now, here's the problem with this trade. We're getting a red bar buy signal in the eagle. We're getting a sell signal on the hawk. That's not to say that, I can't capitalize on a short-term move lower and pick up on a longer-term trend higher. You can see here our trade forecaster. This is another one of those add-on tools. It's telling me that currently we're in scalp mode. Oh yeah, no kidding. And now we're going to be moving into trend mode in about a half an hour's time. Okay, so here's our signal printing. Oops, the market just ran past me there as I was getting that in order. Actually, what I could do is I could offer up this bar also. There we go. Let's do it like that. Oh, can't. Knock it off. Okay, we're going to have to do it like this. Okay, so the trade forecaster is suggesting that once we get out of this next half hour, we're going to be out of scalp mode, hopefully more in a trending environment. And you can see that we're working on a possible green bar sell now. So the signal not printing just yet. The higher we drift, however, the more likely the market is going to enter this sideways channel type formation again. And once again, these yellow bars, when I see all these yellow bars cropping up, that tells me that this market really does not have much direction going on at the moment. Another market lacking direction right now are soybeans. However, we're working on a trend change signal. You can see that through the overnight and this morning, soybeans fairly quiet, but we're working on a trend change signal. So here's the part that changed the trend line from green to red. Here's the counter move, and here they are printing a signal. So the signal is going to print right here. Can I cover it above the high? Ooh, I can. And you can see from our support and resistance lines, soybeans hovering right in the middle of the whole mess. So skewered by the median line, right in between the primary resistance and the primary support. All right, we'll put that back on the shelf, revisit that. Okay, the Falcon becoming a little bit more bullish now. Working on a possible trend change signal to the upside. So here's the up move. We got at least one red bar counter move, and you can see we're printing a green warning dot. Yes, Jay says the oil inventory is a problem right now. Thank you for mentioning that, Jay. We're a few minutes going into inventory. Here's crude oil, and you can see crude oil very uncommitted at the moment. What a range that is. With the market sticking right in the middle. All right, well, you know what? We have the luxury as being in a trading room. I need to see how much my default stop is. Oh, no, I know. I'll go with something more conservative like the chandelier. Or maybe the percentage. Oops. No, we'll stay with the chandelier. What I'm doing is I'm just trying to decide which stop strategy I want to use. And now what I'm going to do is I'm going to use our OCO function here. And I'm going to place an order to buy above and an order to sell below. Now these orders are live the moment you put them on your chart. So I tend to place them away and then pull them in. Crude oil being so insanely volatile, I don't want to place my orders too tight for obvious reasons. So long as the market stays somewhere in the middle here, which it's doing very well right now, I will leave these orders be. What we've also observed in the past is how very often the DTS tool will signal the market's true intention just prior to the report. So currently, we're working on a trend change signal lower. See, we've got this portion here where the market has changed the trend line color. So we'll see if they come back with a buy, or sorry, a green bar, and then come back with a sell signal before the report. I think a lot of people are a little bit more bullish on crude right now. If you're looking at a daily chart, crude oil definitely looking more bullish than bearish, at least at the moment. Joe saying, can you show the Geiger counter for crude? Excellent suggestion. This thing is going to go nuts once the inventory hits. So we've still got about 10 minutes before that hits the floor. And we'll come back to that. Yeah, you can see here from our hawk all these yellow bars. I'm afraid we don't really have much of a trading day, at least not right now. Maybe things will shake up after the crude inventory. Here's hoping. All right, I didn't get much of a chance to manage this trade. What I was looking for is I'm looking for the buyers to be stepping up and supporting this market, which they are not doing at the moment. The NQ had a real tough spot right now. You know, it's so evenly balanced between the buyers and the sellers. It's normally got some sort of bias going on, but not right now. So while we're waiting for that, I showed you the trade forecaster, I showed you the support and resistance lines, I showed you the Geiger counter. I haven't touched on the Day Ranger, which is this little tool that you see up here that I have on my Hawk. The Day Ranger, well, it tells you the daily range. So you have your 5, 10, and 30-day averages along with your current day range and yesterday's range. So you can get a real quick feel for whether the market is expanding or contracting. Very helpful sometimes for setting profit objectives or stop loss. So if you're looking at this and you can say, okay, well, the average range seems to be around 200 ticks. If I want to, say, take 20% as a daily target, as a profit target, well, then I would set a 40-tick profit objective. And likewise, if I wanted to run, say, 15% of the daily range as a stop loss, well, I could run a 30-tick stop loss. So you can go here to your fixed high-low strategy and say you're going to run 30 ticks off of the low. Oop, got to reverse that. So let's throw a minus sign in front of there. There you go. There's your stop loss. That'll be 30 ticks off of the low. And you can see that would be pretty good for holding you through most of these swings so that you could at least get to your profit target or have a chance to get to your profit target. And after all, that's the whole point of a stop loss, isn't it? To give you a chance to realize a profit. Okay, so a glimmer of hope here for our trade. I could take a little bit out of this position by risking it now below this candle, the one with this tail on it. That's showing me the buyer's efforts. I could also just use the trend line. Let's see where are parabolics at. We can preview parabolics. Yeah, why don't we go with parabolics? Oops, don't want that. There we go. All right, so I'll let the parabolics manage my position now. Now that we've flipped over, hopefully we'll see a little bit of acceleration. Obviously we need to take out the 44.52 level. Throw that back. Geiger counter a little bit green. No spikes in the Geiger counter, which is good. The spikes sometimes suggest stop running is going on. Oh, look at how crude is simmering. Not a whole lot of orders going on. And look at our filter all over the map. Our trend line, look at that. It's almost dead flat. Ever so slightly bullish on our support and resistance lines. Technically speaking, if you are trading above the median line, the market is bullish. If you're trading below the median line, the market is bearish. But It's very, very slight. So a couple minutes yet to the inventory. We may just hang out here, and you'll see the Geiger counter look like a tachometer in a moment. It's going to go nuts. It's going to swing back and forth wildly. Ooh, the suspense. Joe's asking about can you talk about the range trade before the inventory report? All I do, Joe, is if the market has an established range, which crude definitely has right now. They opened here, the London Open did nothing. Crude oil opened right here, did nothing except confirm the overnight range. If I have an established range, you can bracket that range to buy above and sell below. Now, it is not beyond crude oil to give you a false breakout. A friend of mine has a more conservative strategy. What he'll do is he'll let the inventory report hit the floor, and then after about a minute, he'll bracket the high and the low, or if there's a more obvious range, he will then trade that. So I suppose it just depends how aggressive you want to be on the market. And we're just throwing a onesie on here. But the fact that the market is so consolidated tells me that this inventory report is going to be important. All right, so the report should hit the floor in just a minute here. All right, here we are, right dead smack in the middle. The Geiger counter slightly bullish. We'll see whether that's the traders allowing everybody to load up on the buy side, and then they're going to send the market shooting lower. All right, it should hit the floor any second now. And we're going to see this. There it goes. Oh, there it goes. A couple early birds. Geiger counter, just onesie twosies. You saw everything dry up. Now we're going to see these numbers spike here in a second. There they go. Ooh, look at that. Whoa, baby. So look at the flood of orders and how that dwarfs what was going on previously. Okay, so we'll see if the breakout holds to the upside or whether crude is in fact being crude-like. Okay, I'm going to go with the parabolics. It's time. Oh, very bullish looking bar. Right here. They really paused. I'm surprised it didn't slip us very much. All right, here they are again. They need to take out 61.85 because that's where obviously the sellers are loading up. Get up there. So my friend's strategy by now would probably be long enough that he would have an order above 61.85 to buy, and he would bracket a sell below 61.45. That's how he would be looking at it. So we'll see here. If they tag us out, I can try to simulate how he would handle a trade. In fact, I could already throw the order down there. Okay, so they're about to tap us. Oops, come on now. So he would have an order to sell below there, and he would have an order to buy above here. So you can see what he likes to do. He likes to let everything hit the floor, let the dust settle a little, and then he'll bracket that range and trade it accordingly. We did get a trend change signal here that failed. Do you notice that? We had the up, down, up pattern. Did not fail. Now we're going down. We should get an up and then come back with a down signal. All right, so that managed to get to our break-even trigger. Look at the Geiger counter, just buried. Loving to see those orders flow. Look at that. So this little green envelope that you see around the current bar, that's part of the Geiger counter also. That's called the trade indicator. It's giving you a short-term interpretation of everything that's going on the Geiger counter. So it's a real quick visual summary saying that, okay, this market's getting a little bit more bullish. The purpose of that is if you're in this trade and you're thinking, well, maybe this would be a good time to roll my stop. Right? The market is getting a little bit bullish. Maybe I'll protect more profit. I'll only give it this bar. And if it fails there, well, then I'll take my profit and go. You can see now that envelope has disappeared. Oh, and now we're getting a little bit more bearish again. So the Geiger counter, not just for entering trades, but also a useful tool for helping you decide whether or not you want to stay in a position. Okay, so that was a decent little trade in crude oil. I knew as soon as it broke here and hesitated that it was going to be time to go. Always fun watching the inventory on crude. Of course, the market moved a little bit too fast to get any kind of signal. Oh, we did get the red bar buy signal. Oh, that came shortly after the inventory. So we saw the breakout above. We generate a red bar buy signal. That would have been probably your best chance to get in on this trade. You could have either bought the red bar buy, in which case you would have hit your profit target, or you could set up for the failure of the red bar buy. Either way, worked out on that hawk scalper today. So big move lower, working on a macro pullback signal. This market does have a little bit of room to recover, though. The problem with this is not the signal generation. I trust the signal. The problem is, where am I going to place my stop? Technically speaking, my stop should go up here, but there's no way I can afford that. See, trade manager says, no, sorry, Eric, you can't afford it. Don't take the trade. That's the other thing about trade manager. You know, if you let the trade manager do its thing, if you can't afford the position, it will not let you take the trade. Simple as that. So alternatively, I could risk it, you know, to cover above this swing low, the logic being that the old swing low should now be resistance to keep the market from going higher. And it looks like we're getting a little bit of a second push attempt on that one. But like I say, the trade, not so much the signal part as where am I going to cover this thing. Not the strongest looking of signal, folks. If you guys are looking at shadowing my trades today, that would not be one that I would get too keen on. Here is crude oil now on the Falcon, and you can see we're working on a proper trend change signal. We had the big move down, which flipped the trend line color. Here's the counter move, and now here is the with trend move. So it should generate some sort of signal out of that. Our soybean trade making some progress through the Geiger counter on here too. You know, a lot of you might not realize how big a market soybeans really is. Look at these bid and ask numbers. You only see stuff like that on, say, a market like the E-mini. There's some huge, huge volume going through this market. Nice thing about soybeans, once they settle on a direction, they pretty much stay with it. How are we doing so far? Oh, we're up almost $200. So we'll let that percolate a little longer. Put that back on the shelf. While all that other stuff was going on, we did get a sell signal here on our hawk. Here's our first micro-macro cross signal. You can see we had some nice follow through on that. Remember, it's when the micro line, macro lines cross, everything comes into sync. Red bars, red trend lines, red filter. Also a trend change signal. Oh, a late filter entry signal, no less. Notice here our trend line does not change color. Our filter does change color. These are huge signals. Very, very reliable. Like to the tune of, well, I want to say 90% reliable, but it's very odd to see a late filter entry signal fail. So when you get a late filter entry signal, it's one of those, it's like the first micro macro cross on the hawk. It's a signal that I'll take almost without exception. Oh, crude oil, here real quick on our hawk signal, turned into a 3-arrow consolidation. Now, normally it's a 4-arrow consolidation, but with crude oil, because it's a more volatile market, I will take a signal on the 3rd arrow. And you can see that one worked out pretty well. Bob is asking, could you take a look at the E-mini with the support and resistance? I sure will. Give me just a moment to load that up. Okay, Tom asks a great question, and I'm going to get to your question here in just a moment, Tom. First, we're going to take a look at the E-mini. I'm just waiting for that to load. Don't want to crash the crash the software. All right, here we go. Okay, so here's the E-mini. You can see I've got the Geiger counter on here, and you can see the volume that goes through the E-mini. Just crazy volume. Now, the E-mini is one of these markets that trades at 12.50 a tick. So what we do is we actually modify our settings a little bit. We have to speed them up somewhat. So I've gone with the alternate settings here. Here's the support and resistance line assortment. We've got 21 lines. This is from our ultimate support and resistance suite. And you can see that the E-mini has pretty much been stuck between the primary support, that's the blue line at the bottom, and the primary resistance, that's the blue line at the top. Now you can use these support and resistance lines different ways. I know Omar El Tuki, who is the fellow who likes to trade the Forex markets with DTS, likes to use the support and resistance suite as confirmation of a signal and also as profit objectives. So if Omar was trading the E-mini last night, he would see something like this, and he would say, oh, look at that, that's a trend change signal. There's the down, here's the up, here's the down. Everything is now in sync, and it's bouncing off of primary resistance. So to Omar, that might give him a little bit more confidence, and he'll say, okay, well, I'll take the signal here, I'll risk it above primary resistance, and I'll look to take profit here at primary support. So then the market trades down, trades up, gets back down through the median line. You can start rolling your stops somewhat, and then finally you hit your profit objective. So that's one way you can use it. I know a lot of people like when they're trading things like pivots and things of that nature, is they'll simply trade crossovers. So as soon as the market, and you have to have a little bit more of a scalping mentality when you're doing this sort of thing, because there could be reactions. But when the market trades and closes above a line, they'll buy. Right? So they'll go in, they'll buy above there. Okay, that one didn't fill, thank goodness. Did not close below the line. Okay, this one closes below the line, so they would sell below here. And you can see you took a bounce off primary support. That's why I say if you're going to trade it that way, you need to have a more aggressive posture. I like to use them, well, first of all, to highlight where possible support and resistance areas are, and also as a confirmation tool. So if I'm bouncing off of the primary support, as I am here, and I come back and I generate a buy signal, as I do here, I'm still being supported by the primary support. This gives me a little bit more confidence to say, okay, maybe I'll try to buy this market up. And then, of course, if the market, that actually worked out quite well, didn't it? So now we're bouncing, hit the primary resistance, bouncing, come back with a buy signal, a with trend signal, still fighting the primary resistance. So I'd like to take the signal above the highs. Still fighting, still fighting. Okay, now we're bouncing off primary resistance. The market comes down, gives us a sell signal. So we're still below the primary resistance. We're now fighting the median line. Maybe I'll take my signal this way, just below the median line, offer up a couple of ticks, try to stay on the right side of the market. And voila, back down to primary support. So that's how I like to use the support and resistance suite. I use it more as a confirmation tool to what the DTS signals are telling me. But support and resistance is one of these things a lot of people like to interpret it different ways. So you may have your own way of looking at these types of things. While we have the E-mini, let's bring the Hawk over here, and I'll show you why we use alternate settings. This is the standard 6-tick brick on the Hawk. And actually yesterday the E-mini was really good. Normally we don't see a session that big. Normally the sessions end up like this, where we get a day break there. Oh, actually the day before was pretty good too. So the E-mini, a lot of activity of late. What tends to happen is that we get the day break lines that look like this. And what that does, this is supposed to be your scalping tool, so it doesn't generate enough signals for you. It doesn't mean you can't trade it this way, it's just that you're going to have to recognize that you're going to get fewer signals. Maybe you're going to have to hold after hours, maybe you're going to have to hold through the evening. The signals, they still work, they're just going to take longer to follow through. So if you're going to day trade it, what we do is we dial down the brick size to our alternate setting, which would be 4 ticks on the Hawk, 4 ticks on the Falcon, 6 ticks on the Eagle. That was that little remark I made about Moose Jaw, Saskatchewan being the telephone prefix. So now you can see on the mean Renko bars how we actually generating more signals. So we had a first micro macro cross signal there, very nice follow through, thank you very much. Oh, look at this, a first micro macro cross that did not complete. That is odd. Actually, let me double check, because our high probability target in the E-mini is only 4 ticks. Did we get 4 ticks out of that? Oh, look at that. Just tagged the high probability target, then started to reverse. You'll see that a lot, actually, where the market will hit the high probability target and then give you some sort of reaction to it. Here's another signal. Market comes down, hits the high probability target, and then all of a sudden it starts to react. It actually went the opposite direction. So that's why we would use the alternate settings for those instruments that trade at 12.50 a tick or more. Before I get to Tom's question, Vincent is asking a question. Vincent asks, why do you use tick charts and how do you determine which tick size to use? I do not use tick charts. I use the mean Renko bars. See here? It says mean Renko bars. IW, indicator warehouse, mean Renkos. And they're set at an 8-tick brick. And that came from about a year of testing. The DTS system was actually tested for 9 months before it was made available to the public. There has never been a DTS upgrade, short of a cosmetic adjustment. The DTS tools were all vigorously tested before they were ever made available. This is not a product that was rushed to market. We wanted to make sure it worked. We wanted to make sure the signals were reliable. We wanted to make sure we caught all the bugs. So a lot of people like tick charts, and you know what? To DTS's credit, you can use a tick chart. You can use a time-based chart too, or a volume chart. Where's my ticks? So let's say, and I'm just pulling a number here, folks. Well, let's go with the default 150 tick. You can see that DTS still produces signals. See, we're producing a buy signal right now. We got the triangle hash mark telling us that the signal is complete, so you can go ahead and you can take that signal. If you prefer to work off of a tick chart, or let's say you like a 5-minute chart, you can do that too. See, DTS produced a buy signal right here just before that big move up, produced a buy signal here that didn't trigger, produced a sell signal here. So you would use the signals a little bit differently on your other chart styles. About the only chart style you cannot use is a point and figure chart. But you know, let's say you're into something real funky like these Kagi charts. You can see we're still printing buy signals, still printing sell signals. Nice little trend change signal up here that had some decent follow through to it. But the chart style of preference or recommended chart style would be the mean Renko bars from Indicator Warehouse. Those come as part of the DTS package. Oops, I gotta put my wicks on because of the black background. Here we go. And as I mentioned before, what I really like about the mean Renko bars, it really shows you who is in control of the market. The market is always a tug of war, right? So we have buyers come up, all of a sudden we hit the skids here. Sellers break the low. So right now the sellers right here, have control of the market. But do you really think after the buyers rallied the market like this that they're going to walk away from it? No. So what happens? The buyers push the market up. And after stalling the seller or the buyers for this long through here, do you really think the sellers are going to give up just because the buyers push back? No. So now the sellers push back. And now we know that there's a tug of war. There's going to be a decision coming here real quick. The buyers come back and now the sellers come back. We're actually generating a trend change signal, but this is a signal that I know is reliable. How do I know it's reliable? Well, because of the story that the mean Renko bars have told me. Buyers pushed up, sellers held the market. Sellers pushed down to show their strength. Buyers are pushing back. Sellers are saying, oh, no, you don't. Buyers say, oh, yes, we do. And sellers say, oh, no, you don't. And they jump on them, and DTS produces a sell signal, which we can set up to take, maybe cover it like this, and down they go. Once again, we got a little past our high probability target on that one. But that's what I really like about the mean Renko bars. I was a dyed-in-the-wool 5-minute chart trader. That's how I day traded. And Adam came to me with these mean Renko bars and said, Eric, you got to try these. And I admit I was reluctant, but then once I did, there was no going back. They are that good. All right, so finally to Tom's question, and thanks for your patience, Tom. Tom asked, how does the trade manager prevent you from taking a bad trade? I would like to see something that when you put the order in, blocks you or pops up with a message regarding the riskiness of the trade and asking if you want to override before placing a bad order. Okay. Now, the way DTS produces the signals, there are signals that are higher probability signals. We don't take every single signal that the DTS system produces. And this confuses some people when they first take a look at DTS. They say, whoa, there's so many signals. But actually, we only focus on a few signals. And let me show you what I'm talking about. Here is the what we call the cheat sheet for the Hawk, which is our scalping tool. And it's these 5 signals that we're going to concentrate on. And it really doesn't take that long to learn them. These are your high probability signals that you're going to be looking for. So you have your first micro-macro cross, which is your strongest signal. Your macro pullback, which is also a very strong signal. 4-arrow consolidation, also very reliable signal. Post 4-arrow consolidation, also a reliable signal. And then the red bar buy or the green bar sell, its counterpart. And this is also our counter trend signal, which we can buy or sell. All right, and we have similar setups for the Falcon and the Eagle as well. So regarding taking a bad trade or avoiding a bad trade, what you're going to want to do is you're going to want to concentrate on taking those signals. So just as a for instance, here's a first micro-macro cross, here's a first micro-macro cross. We might be working on another micro-macro cross right here. If you only wanted to take high probability signals, you would only take first micro-macro cross signals. And you can see you would have done okay today. Even just taking these 3 signals, if you held it out for nothing more than the first micro-macro cross signal, which is a very powerful signal, you would have a very respectable day today. And then if you wanted to incorporate some of the other signals, like here was a 4-arrow consolidation. Actually, that one didn't trip, did it? Here's a macro pullback signal that had a little bit of follow through to it. Here was the, where did you go? Where was that red bar buy that we sold? Oh, here was the red bar buy that we sold. And I took, I took my loss a little bit early here, but had I left my stop up here, I'm going to make a note in my journal about that. Had I left my stop up there, that would have also turned out to be a profitable trade. I do believe we took this first micro-macro cross here, however. So you can add a few more trades to your trading as well, but regarding taking a bad trade, there is no tool that can do that for you. We concentrate on high probability signals, but there is no tool on earth that will say, hey, Tom, don't take that signal. Because the market's not going to do it like you think it's going to do. It doesn't happen. What Trade Manager does do is it protects you so that if you do take a bad trade, you don't risk more than you can afford to lose. Let me demonstrate. So here is a macro pullback signal. We know it's a macro pullback signal because everything is in sync except the micro line. The micro line has changed color. What do most traders do to try to restrict their risk? Well, most traders do this. They enter here and then they jam their stop in really tight. And somebody told them once that, hey, I need a 3-to-1 risk-reward ratio, so if my stop is, if my stop is here, then I need to have my profit target at least 2 to 3 times away, right? So they set up a trade that looks something like this. Well, what's the problem with doing a trade like this? The problem is that you are killing the probabilities of your trade. The probability that this trade works out before your stop loss gets hit is limited. Why? Well, because you've placed a very tight stop. Now, in this instance, the market brings you in and then subsequently stops you out. So now you've incurred a loss. You didn't even give this trade a chance to work out. So what should you do? Well, you should give this trade a reasonable chance to work out. What does that mean? Well, that means the safest place to place a stop is above the swing high. So we've got sort of an intermediate swing high right here. You put your stop up there. But what do most people do? They say, whoa, I got to get 3-to-1 risk reward. I got to put my profit target like way down here. And they look at this and they say, oh man, $300, I'm not going to do that. Or worse, what they do is they say, oh, I'm going to be a conservative trader. I'm going to trade 3 contracts. And so they go like this, and they put their stop up here, and they put their profit target down here, and they think they're being a smart trader. Never knowing that if this trade does not work out, they have lost more than they can afford to lose. Let's say you're trading a $10,000 account. You've just risked 10% of your trading capital. It reminds me of my very first trade ever. I took a trade in corn with a $2,500 account. This is when you could still trade with $2,500. It tells you how long I've been doing this. I had a $1,500 risk position on a $2,500 account. It was an all or nothing gamble. If that trade didn't work out, fortunately for me it did, but I would have decimated my account to the point where I could no longer trade, or maybe take one more trade. But that's what's going on here. If you're trading a $10,000 account, you've just risked 10% of your trading capital. You don't know where the market's going to go from here. Don't let anybody tell you they know where the market is going next, because they are lying in their teeth. Some people look good and they say, oh yeah, I made that great call. I said the NASDAQ was going to fall down here to 4,400 and sure enough it did. No, it's a 50-50 proposition. You can't tell me that you know with any certainty where the NASDAQ or crude oil or the E-mini or the euro or anything is going next. But because your prediction works out every once in a while, you think you're a rock star and all these people are following you and trading your advice. That's not how it works. You want to know how the big boys do it? The big boys control their risk exposure. They say, I'm only going to risk 2% of my trading capital. So I set up the trade like this. What's the point of strangling the trade? There is no point. So let's set our profit objective, let's say for 10 ticks. What is the point of putting the trade like this? Note my risk exposure. Now this is based on my account, so don't freak out at the numbers, okay? It's going to be different, 2%, whatever 2% of your capital is. So if you're trading a $10,000 account, that's going to be $200. So notice here, I strangle the trade. What is my risk exposure? $385. If I give myself a reasonable stop, let's say up here, what is my risk exposure? Oh, look, it's almost the same. What if I place an intermediate stop? Let's say I'm going to use this swing low to cover the trade. Let's say I want to go just above there. Oh, look, my risk exposure does not change. This is how professional traders trade. They control their risk. You've heard, let your profits, cut your losses short, let your profits run. Great advice, right? How in the world do you do that? Nobody ever tells you that part. This is how you do it. Did you notice what was changing though as I was changing my stop placement? What was changing was my quantity. So here I might be able to trade 7 contracts. Here I can only trade 1. That's what changes. So what the trade manager does is it prevents you from risking more than you can afford to lose. Let's say I try to risk it way up here. Trade manager says, no, Eric, sorry, can't afford that. You're going to have to pass on that trade. But not only does risk manager control my risk, it also correctly capitalizes me on every trade so that not only do I control my risk, but I also maximize my profit. Very, very important concept. What do most people do? Most people say, oh, okay, I'm going to be a conservative trader. I've only got a small account. I'm only going to trade 3 contracts on my $10,000 account. And don't tell me you guys don't do this, because I work with people like that every single day. And they end up risking more than they can afford. So what they do is they take the first signal, and what happens? The signal knocks them out, and let's say they took a $500 loss because they're trading 3 contracts. They take the next signal, it craps out again, so now they're down $1,000. And they say, oh, okay, the market's not responding today. I better dial this down. I'm only going to take a single contract on the next trade. What happens? The market lights up, hits their profit target. Well, let's say they had a $300 profit target. Well, had they run their 3 contracts again, they would have made $900. They'd almost be even for the day. But what they did was they overexposed themselves on the risk side so that they ended up $1,000 in the hole. And then when they finally did have a winning trade, they didn't capitalize themselves enough on the winning side, so they only made a $300 profit. So now they're still walking away at the end of the day $600 in the hole. Can you see how it doesn't take you very long to blow up an account trading that way? So that's what the trade manager does for you. It always correctly capitalizes you so that when you have a winning trade, you win, and you win big or bigger. And when you have a losing trade, you never wipe yourself out. And you've seen how I manage myself in these types of positions where, okay, the market brings me in. All right, it's retracing against me. I'm not sweating it because I know the market is in a downtrend. It's going to have to make a move. All right, here come the sellers. All right, I'm a seller. Here are more sellers. Let's start moving with the sellers. Right, so now I can safely roll my stop here. If the market reverses, stops me out, okay, I'm going to take a hit, probably to the tune of about $300. But as the market progresses lower, I can keep rolling my stop. And all this time, I've enabled myself to hold on long enough that, hey, I can actually realize a profit, right? And that is so important to trading. Trading, a lot of people only focus on the entry signal, but you need three things to be a successful trader. You need a good entry signal, you need a way to manage your trade once you're in it, and you need correct money management. If you have those three things, believe me that you are 90% ahead of the curve over every other trader out there. And I know I get a little bit off on a tangent when I talk about these things, but it is so, so important. Yeah, Tom says, I'd like the programmer to have you program what trades you watch to have them pop up in a dialog box telling you not to take the trade if your parameters are not met, to keep me from jumping into an emotional trade. Well, that is actually, I'll tell you, the trade manager is good in that respect also. Because first off, we're going to concentrate on our high probability signals, right? So we're going to be looking at things like first micro macro crosses. We're going to be looking at things like macro pullback signals. So right there, that helps eliminate some of the emotion. But here is a huge emotional relief. I can set up my trade like this, and I know I'm not risking more than I can afford to lose. Would it be unpleasant to take a hit for $245? Yes, definitely. Absolutely. But is it going to ruin, I'm trading a $20,000 account here, is it going to ruin my $20,000 account? No. Okay, so I lost $245. It's not the end of the world. If I'm trading a $2,500 account, okay, I'd feel a little bit different about it because now I've just lost 10% of my trading capital. But that is a huge, huge emotional relief to know that I can never risk more than I can afford. And if I'm looking at this setup and I'm not feeling real good about it, dial down the risk amount. I'll only risk 1%. I'll set up my trade. Okay, trade manager says I can still afford it. Even at 1%, I'm only risking 1% of my capital. If the trade doesn't work out, okay, I lost $200. There's 1% of my trading capital. That's a ripple. That's not even a ripple. That is a huge, huge relief. Now you can set, you're talking about the pop-ups, you can set your DTS tools to give you a pop-up alert. So you can have it pop up on the setup or on the entry price or both. If you like, you can even have it email you setups. I prefer the audio alert. There is an audio alert that tells you, scalp or swing or trend, and then all you have to do is go take a look at that particular tool and analyze the trade and say, yeah, okay, that's one of my high probability signals. I'll take it. And I'll control my risk, and I'll give the trade a decent chance to work out. And then I'm in, and okay, it's going in my favor. I'll start rolling my stop, and hooray for me, I've had a profitable trade. That is the key to trading, right? That's how you're going to make some money. Sam's asking, is there a way to automate this stuff? Um, we've toyed with the idea of making it a black box system. Um, yes and no. The problem with going totally black box is that, well, listen, folks, it's your money, right? If you want to trust all your money to a total black box, that's your um, prerogative. For me personally, I want to be able to look at a chart and say, oh, late filter entry signal. Hey, I know that's a high probability signal. I'll go ahead and I'll take that. Or, um, here, well, no, that one didn't work out. The trend line changed too late. I was looking for a trend change signal. Oh, here's a trend change signal. I know that's a high probability signal. I can take that. You can automate it to the degree, say, with something like the Trailblazer here on the Raptor, where it's essentially a one-click system. So you can, and I'm just throwing an order here, folks. Don't think that I'm doing something. But say you throw in a buy order, you can see you automatically got your trailing stop, automatically got your break-even trigger, automatically got your profit target. So, that's fairly black box. But as far as total, just fund it and plug it in, no. No, not yet. They're toying with the idea, but nothing's come of that notion just yet. And believe me when I say there's not that much to learn. We have people in the trading room who, when we first started this, people were leaving the trading room after 2 or 3 months, and we thought we were doing something wrong. And Adam would, contact folks and say, did we offend you in some way? Why are you not in the trading room anymore? And they would tell us very plainly that, oh no, I got it. I got it. You taught me what I need to know. You taught me how to recognize a trend change signal, right? Trend change signal right here in the Falcon. Okay, so now let's set up to take the trend change signal. I'm going to risk it down here. I'm going to try to give, the trade some staying power, right? I don't necessarily want to risk it right there. Why? Well, because, hey, we're in a downtrend, right? The sellers aren't going to walk away from this market just because I'm starting to buy, but it is a trend change signal. I need to buy it. I could have dialed down the risk amount. Right? I could have made this only risk 1% of my capital. And now we'll see if this bar continues higher, then I can start to get more aggressive with my stops. I can say, yeah, okay, it looks like the buyers have control of this market short term. And I'll take the steps to start to protect my position somewhat. If the market fails here and trades back through the low, well, then I definitely know I'm on the wrong side of this trade, right? But I'm giving this trade a chance. It's not like I've got my stop right down here, sweating every tick. I've got my stop at a reasonable level. See, there we go. Got a nice little hop to the upside. Still waiting on perhaps some sort of reaction here because we just broke out this area here. But that's how you trade. Trading, as much as we would want it to be 100%, it is always a gamble. We're dealing with future events. Like Ray Burke always said, trading the left side of the chart is easy. Anybody can go through here and say, oh yeah, that one worked and this one worked. Notice how room moderators never show you the signals that fail. I do. I'll show you a signal that fails. But like Ray says, trading the right side of the chart, not so easy. That's why you have to gain some confidence in your system. You have to gain some confidence in the signals and go from there. But that was a very good question, Tom. I'm glad you asked it. Sam says, but you can make the computer follow the same rules as you do. I can be your beta tester. Well, we'll let you know if it ever goes that far. All right, you guys. I think unless there's any more questions, we're going to button up the room for the day. And let me provide you with that link one more time for those of you who might be interested in any more about these tools that you've seen here today. If you have any questions, of course, you can email me at eric@supportandresistance.com. That's my other website. All right, you guys, if you're trading this afternoon, I think we're going to see the NQ continue lower today, along with the rest of the stock indices. Crude oil also heading lower, and soybeans putting in a little bit of a rally after finding our high probability profit target. Okay, DTS owners, I will see you in the trading room again tomorrow morning, and thank you everybody for your attendance today. I'll talk to you soon. See you next week. Bye for now.